Which is right for you near retirement, stock market versus annuity? By the end of this video, you'll have a general understanding of the pros and cons of investing in the stock market versus investing in an annuity. You'll also have a solid idea of which one is best for you based on your unique situation. While navigating life through our 50s and 60s, many of us face this question: should you bet your golden years on the stock market or seek the shelter of certainty with annuities? Or are annuities dangerous and misleading? Today we're answering this question that divides the financial world, a battleground of ideologies where retirement dreams are at stake. It's a clash between tradition and innovation, risk and security, Wall Street and guaranteed income. Throughout my career, I've helped clients use both of these strategies to retire stronger. But which one is right for you? I kind of think of this question like this: which one is better, a 4x4 pickup truck or a Lamborghini sports car? Now hold on, not so fast. I didn't ask you which one you'd rather have. I asked which one's better. If you're like most people, they'd answer that question with, well, it depends. And that's absolutely right. It depends on the situation, doesn't it? If you were taking your family camping this weekend into the backwoods of the national forest, carrying a load of firewood and camping gear, down some dirt roads with a mud puddle here and there, your answer becomes more clear. But if you're 35 years old and it's date night in the city, you might lean more towards that Lamborghini. I know. There's some of you that are probably thinking, well, I'd still rather have the truck on date night to drive around the city. And I can appreciate that, but you get my point. Each vehicle can be better under different circumstances. By the way, guys, I'm Rich Strehl, and this is Protection USA, where we help you retire strong and fearless. Okay, let's dive in and begin dissecting the question of annuity versus stock market for your money as you approach and enter retirement. The important thing to remember as we move through this is there's not one right answer, is there? That's definitely a true statement. There's not one right answer. However, when we figure out our goals, our specific situation, and risk tolerance, we can absolutely conclude which strategy is right for you. A few questions to ask yourself at this phase of your life are: how do I envision my ideal retirement lifestyle? Do I have a strong desire to leave a legacy to my loved ones or to charity? This one's important because some people have so much money that a legacy is inevitable. But on the other hand, for many, they will need and want to use most, if not all, of their nest egg to reach their retirement goals. Another important question to ask yourself is, am I comfortable taking on market risks for the potential of higher returns, or do I prefer a more conservative approach to minimize risk? Once we begin to understand and picture what our retirement is going to look like under the ideal circumstances, we need to understand the pros and cons of both the stock market and annuities. Let's go. The stock market is a complex financial system that offers both opportunities and risks. On the other hand, an annuity is a financial product designed to provide a steady and guaranteed stream of income over a specified period, typically during retirement. They too have their own list of pros and cons. Let me keep going on annuities for just a second because there are several types, and understanding the differences can minimize confusion and help avoid bad investment decisions. Keeping with the theme of simplicity, a fixed annuity performs and is structured very much like a CD from your bank. You put money in, leave it for a period of time, and it's guaranteed to grow at a predetermined interest rate over that time. Not very exciting, but they do have their place. A variable annuity, in my opinion, creates the most confusion and bad rapport for annuities. These can be expensive, they're attached to the stock market, which means they can lose money, and they have the most moving parts. Then there's one we're going to predominantly discuss today, which is a fixed index annuity. This one has little or no fees depending on which one you choose. It's guaranteed not to lose any money at all, and the unlimited upside potential is based on the gains of the stock market. Let's touch on some pros and cons of both annuities and the stock market. Probably the most popular perceived benefit to the stock market is the potential for higher returns. The stock market has historically provided the potential for higher returns on investment, allowing investors to build wealth over time. This is also a benefit when choosing the right annuity. Of the two annuities we're discussing here today, both of them have outperformed the S&P 500 over the past decade and longer. Many people say that annuity performance is capped, and that's only true in some cases. We'll help you find the right annuity that's best for your situation and has no upside growth limitations. Next is diversification. Investing in stocks allows you to spread your risk across different companies and industries to reduce the impact of poor performance in any single investment. To simplify, it gives you the ability to not have all your eggs in one basket. This is not the case with a fixed index annuity. However, because the annuity offers 100% principal protection, you flat out cannot and will not lose money due to market fluctuations, which is also known as stock market volatility. Therefore, diversification mostly becomes unnecessary. Next is liquidity. Liquidity basically means easy and fast access to your money. For example, if today is Monday and you wanted to get $50,000 in your hands by this coming weekend, you could do this through a stock market account, assuming you had that much money in there. An important side note here is to remember that if your money that's invested in the stock market is held inside a 401k plan or IRA, that can change things if you're under the age of 59 and a half. This is because the government has an additional set of rules and penalties on taking money out of these types of accounts prior to that age. A drawback to annuities can be lack of liquidity. Annuities are not the place to drop in a large sum of money and then try to pull out 50 grand 6 months later for a down payment on a new boat or something like that. Annuities have surrender charges for withdrawing large sums of money too early into the contract. This typically applies the first 5 to 9 years of ownership. I think it's fair to say that historically, the market has always done well over the long term. But a clear con to the stock market is market timing challenges. The long run, so to speak, is made up of highs and lows. And the big question or fear is, what if the market is at a low when I decide to access my money? Locking in losses like this can be a problem for sure, and an even bigger problem if you're in the phase of your life where you're no longer funding your account. In other words, you're no longer contributing to it on a regular basis through your paycheck. This is one area where annuities shine. You'll enjoy locked-in gains. Depending on the structure of the annuity, all growth is locked in on an annual basis. This takes one of the biggest fears off the table, the fear of a market crash or significant decline during my withdrawal years. Another huge benefit is lifetime income. This means that when you get into retirement, you can turn on a stream of income that will pay you for the rest of your life, regardless of how long you live. This is a fixed amount of money that will never decrease for any reason. This is a lot of peace of mind because the biggest concern for most retirees is one day running out of money. Having lifetime income permanently eliminates this fear. And finally, and probably the biggest con with the stock market, is the potential for loss of principal. There's always the risk of losing your money, especially if the market experiences a prolonged downturn. Every time something bad happens in the news or the wrong person gets elected, retirees who have all of their money exposed to the stock market, well, they lose sleep at night. In my opinion, you've worked too hard for too long to carry this kind of fear and concern with you every day of retirement. A quick note about annuities is if you choose the right one, they're either inexpensive or have no fees at all. Remember I mentioned our top two annuities? Well, one of them has a 1.1% annual fee and the other has no fee at all. All right, so how do we put all of this together? That was a lot of pros and cons on both sides of the fence. So Rich, tell me, which one is best for me? Well, like I said in the beginning, it has to do with your goals, risk tolerance, and time horizon. However, generally speaking, for most of our clients, the answer is both. Let's say for round number purposes, you have $1 million in your 401k and you're retiring next month. What many of our clients are doing is rolling somewhere between 50 and 70% of their 401k into an annuity, leaving 30 to 50% of their assets invested in the market. Most people entering retirement are beyond the age of 59 and a half, so this means they have immediate access to the money in their 401k plan for retirement purposes, or even opportunities or emergencies. The other portion of their assets, which is in the annuity, is experiencing guaranteed growth, which is contributing towards their lifetime income. When you know you have money you can get your hands on from your stock market account, and you know that you have an account that's growing regardless of what happens in the market, and it's going to pay you for life regardless of how long you live, well, frankly, you sleep like a baby. By the way, I would also maintain a comfortable amount of money in your regular savings account at your bank. This is one of the highest forms of liquidity. I hope this information was helpful, and if you'd like to discuss these details or your situation, please visit our website for direct access to my calendar. Thank you for watching or listening, and until next time, may God bless you.